Bitcoin just smashed through its old all-time high, and this time it's not by accident. New Bitcoin investment funds have poured fuel on the fire. Countries are adding it to their national reserves, and more companies than ever, they're diving in head first. But here's the big question. Is all this big money action actually good for Bitcoin, or is it secretly a massive risk? We're going to break it all down, what's happening, why it matters, and what it can mean for you. And stick around, because by the end of this video, I'm revealing the one key detail that could completely change how you think about Bitcoin's future. Let's start with this. Why are companies buying Bitcoin like crazy right now? First off, a lot of investment managers are super bullish on Bitcoin. But here's the thing. They can't actually buy Bitcoin. They can only buy stocks. So what do? They invest in companies that hold Bitcoin. That way, they still get exposure without touching the asset directly. Take MicroStrategy, for example. Their whole strategy? Stack as much Bitcoin as they can. And it worked. Their stock price exploded. In fact, because they're a smaller company in terms of total value, their stock has sometimes outperformed Bitcoin itself. Wild, right? Second reason? Leverage. And I'm not talking about risky day trading style leverage. These companies are using long-term corporate bonds, basically low-interest loans they can hold for years, to buy more Bitcoin. The smart part? These loans aren't tied to Bitcoin's daily price. So if Bitcoin dips, they're not forced to sell. They can wait it out. This is a huge advantage compared to short-term leveraged funds that often collapse under pressure. It's a strategic play. Borrow at low cost, buy Bitcoin, and ride the wave higher. When Bitcoin's price surges, it's like rocket fuel for their balance sheets. Now, using leverage isn't for everyone, but when it's done like this, it's surprisingly stable. And the best part? You've now got a whole menu of these companies, each with different levels of risk, so you can pick one that fits your style. Let's zoom out a bit. Bitcoin has come a long way. It started as an experiment, people mining it on laptops. Then it slowly went mainstream, better wallets, easier exchanges. And now it's rubbing shoulders with the giants on Wall Street. Public companies hold it, investment funds give people exposure to it, even national governments are buying in. But here's the beautiful thing. Even with all that big money attention, Bitcoin is still wide open. Anyone, anywhere, with an internet connection can still mine it, buy it, and hold it themselves. It's a permissionless system, no gatekeepers. Of course, not everyone's thrilled. Some folks look at this wave of corporate and government Bitcoin buying and say, hold up, this looks like centralization. Isn't that exactly what Bitcoin was built to fight? It's a fair question, but mostly those fears are overblown. Here's why. Bitcoin runs on something called proof of work. That means no matter how much Bitcoin you own, you don't get any special control over the network. You can't censor transactions, you can't rewrite history, you could own 100,000 Bitcoin and still not control a thing. The rules stay the same for everyone. Now, here's where things get interesting. Right now, Bitcoin is kind of in between worlds. On one hand, it's an incredible long-term store of value, portable, hard to inflate, and globally recognized. But on the other, it's still not widely used as day-to-day money. Why? Volatility. Nobody wants to pay their rent in Bitcoin only to have the value drop 20% a week later. So for now, most people treat it like an investment, not a currency. Over time, that could change, especially as Bitcoin grows and the price swings settle down. But we're not there yet. And while stablecoins offer a workaround for daily spending, most of them are controlled by big companies, which isn't ideal if you care about financial freedom. So what's the bottom line? The fact that companies and governments are buying Bitcoin isn't just good or bad, it's inevitable. If Bitcoin couldn't handle big players entering the space, it was never going to succeed on a global scale anyway. That's the whole point. It's a system that's open, neutral, and resistant to control. Whether you're a giant hedge fund or a guy with $50 in a phone, Bitcoin works the same. All right, let's talk upside. What are the benefits of these big Bitcoin companies? First, more people get in. Regular investors who don't want to touch crypto can still get exposure through stocks. Second, it provides a safer on-ramp. It keeps people from YOLOing into shady altcoins and meme tokens. And third, high-octane gains. Some of these stocks move faster than Bitcoin itself. And if you like risk, there are even ways to leverage those stocks for wild swings. But Here comes the big reveal I promised. As more and more companies jump in, the deals they get to finance their Bitcoin buys are going to get worse. Why? Because the easy money will already be gone. That means newer companies will be more exposed to risk, especially if Bitcoin's price takes a sharp dip. If one major player is forced to sell a massive chunk of Bitcoin, that could cause a panic, a domino effect, and trigger the next bear market. That's the real risk, not to Bitcoin's network, but to its price stability. Still, the bigger picture, it's incredibly bullish. Big institutions are here. Bitcoin is stronger than ever. And if it keeps climbing, don't be surprised when other cryptos finally catch fire too. Things are just getting started. If you got value from this video, don't forget to punch that like button. It helps way more than you think. And if you haven't already, smash that subscribe, ring that bell, and I'll catch you in the next one. Stay curious, stay sharp, and as always, stack smart.